Jones. The EN is actually a 0. Griffin Jones wants to know, are you sure that Tom wasn't in your backyard last night? Tom, were you doing anything fun yesterday? Supposed to terrorizing me?
I was at the Dua Lipa concert last night, which is a very surprising place for me to be. But I got dragged there by my wife, and it was good. It was fun.
It's like, where in the world is Carmen Sandiego? Oh, the Dua Lipa concert. Yeah.
There you go.
That makes sense. There you go.
So I don't think, my point is, it would have been a tough round trip, to get to your house. So.
Yeah, well, asked and answered, and that's why we respond to what people say on Twitter. Tom, are you excited for this trading week? It's the second week of September here.
I kind of am because, I missed Friday because we were on the road doing the show in San Francisco. I mean, I didn't miss, I didn't have a chance to really trade on Friday because we were doing the live trading show, but I watched the market the whole day. And it was almost as if we wrote the script. I thought bonds were going to be up big, and they were up almost a 0.20. And I thought S&Ps would be down. And it's exactly what happened. I mean, I didn't, it was a good day for us, but it wasn't like, it wasn't earth-shattering, record-breaking, that kind of thing.
Well, let's start with stocks because S&P charged up to a new all-time high ever so briefly on Friday morning, and then came back.
That was pre-market. I mean, pre-market, they, overnight they were pretty good. Yes.
What do you do here now? We're back to 64.88. It's an 11.7 IVR. Volumes are still pretty low, even though we're getting back from the summer. What kind of market is this for you, sir?
Well, actually, in the end on Friday, they didn't close that week. The NASDAQ, I think, actually closed up. The Russell closed up, and the Dow and the S&Ps closed down. So as much as I thought they had a chance to do a little damage on Friday, it was pretty much a non-event. And, so now the bonds have settled the case for the rate cut. And so, we kept saying, we've been saying for the last couple of months, you got to buy bonds on every dip. And when they finally get up over 116, 115 or 116, the rate cut will be it'll be a no-brainer. The question now is, do they go 25 or 50? I think they might even go 50 just to just to make a statement. But I don't necessarily know that that's bullish for stocks. Stocks are already at record highs. We're 2 ticks off record highs. You saw what happened yesterday on Friday when the bonds were up that much. But it's a very mixed message. So anyway, I guess my point is stocks are really rich here. Bonds are probably finally fairly priced. So I don't know if bonds will go higher on a rate cut here because I think they got up to where they need to be. Maybe they get to 117 and change, but I think where they are right now, there's no play in bonds. They lost all their volatility. There's no play in there. And I think for stocks, they're still super rich and the risk is to the downside. They might get a bounce tomorrow, but the risk is to the downside.
I mean, to your point about bonds, thinking about how much more can a rate cut get priced in, Friday, the Fed funds futures closed at a 100% chance of a 25 basis point cut and an 8% chance of a 50 basis point cut. So either you're betting on treasuries because you think that we're going to get lower yields to a more substantial degree and 50's coming, or we have our 25 locked in. So no Fed meeting this week, but the week after.
Yeah, it really just depends what the bonds do this week. If they get up over 117, you can probably bet on 50. But who cares? I mean, what difference does it make? 50, 25. The 2s, 5s, and 10s are already trading with that discounted in there. So there's no news. See, S&P's open down. Let's see, they opened down 2, 3, somewhere in that range. NASDAQ's unchanged, down 5, something like that. Dow's unchanged. Russell's pretty much unchanged. And the bonds are up a couple of ticks. Notes are unchanged. I think that, I don't think this changes market risk at all. I just don't think it is. The risk is still that there's an unreal concentration of dollars in the same tech names. And the question is, how long can they hang in there? How sustainable is it?
Let's talk about some of those tech names, in fact. So Google last week was up 10.7%. Volatility, though, not that high here.
Nope.
Factor in the rally really falling off.
Yep.
235.17 right now, 14.6 IVR.
Yeah.
Do you start fading this off? Very
very
unattractive.
unattractive at
Okay.
these levels. I mean, I'm not short Google, so I don't want to say, but
Sure.
incredibly unattractive and not something that I think is not something that I think there's a lot of play in. There's no premium to sell in there. Um, you know, I mean, it's in no man's land now.
You mentioned there's no premium to sell in there, and I suppose Broadcom fits that bill too. It's a 3.2 IVR. Friday, it was up 9.4%, closes up 8.5% overall for the week. So Friday helped
Yeah.
get it back into positive
Friday,
territory.
the funny thing
Mhm.
is there was two earnings plays on Friday. There was Lululemon, which was down outside the expected move to the downside. And but I got to tell you, they just crushed premium in there. So Lulu wasn't even, I don't think it was a bad trade for anybody unless you got long it. But AVGO was up about, on the opening, it was up about 2.5 times the expected move, almost 3 times the expected move. And then by the end of the day, I think it was just, about a little less than 2 times. I think it had an implied move of about 6 or something. And it was, and it was whatever you said, 8.5 or 9. So I think AVGO was the tough one on Friday, and AVGO has been the tough one all year. At these levels here, I don't know what you do with it. I hate to get short stocks like that after they have a bounce up, but maybe in a couple of days you can get shorted.
I'm just looking around at some of our top performers from last week heading into this week. Walmart was up 4.58%.
Yeah,
Kind of been chopping around here for the last few months, hasn't cleared out its yearly highs yet.
yeah.
8.5 IVR, another one of these low vol names, even though it was a big mover
It's
last week.
really almost a next to impossible stock to trade, and it's a stock
Mm.
that's been, between 95 and 100 like forever. If you really want the names where I think there potentially is some play, like it wouldn't be Walmart. Like I think the stock that may be the richest of anything on the board that we watch may be Reddit.
Mm.
And so the problem with Reddit is it doesn't have great markets. They're kind of like in the morning, they're like $1 wide. Later in the day, they're like 30 or 40 cents wide on the option side, but it's $240. It hasn't really had like what feels like a downtick for weeks. And that's one stock I think that is actually pretty interesting because it doesn't have a lot of volatility, but it's just been nothing but buyers since the stock traded down near 200. And then there's a few others that are getting back up into that territory. I mean, Meta at 750 is over 750,
Sure.
and um and then you're going to have a couple of like stocks that jump up on Monday from the S&P change, like Robinhood and AppLovin. I think they're both. I'm not sure what AppLovin's up. I think Robinhood was up $6 after the close on Friday, and I haven't looked at AppLovin because I don't like trading that stock. I think Robinhood's more liquid than AppLovin, but it's only got a 12
Oh,
IVR.
I think so too. But you
Yeah,
mentioned Hood closes on Friday at 101.25,
yeah,
107.31 after hours. And then heading over to App Lovin, that was 490 at the close here and at 521.70 after hours.
yeah. And let's remember that's like a record. That's a new high in that stock. Like that's a really interesting stock. If you if you could get filled, it's really hard to get filled, but that's an interesting stock that may be a good short candidate for either some long put spreads or some short call spreads for those that are if you want to take a little bit of risk, you want to roll the dice a little bit. I think that's an interesting stock, maybe even more interesting than Hood, because Hood's not near record highs, but AppLovin is. And then there's other stocks that are still you know it there's other stocks that are still super strong, but Friday was a very mixed day. You had like AMD down $10, but yet you had I think Nvidia, oh, it was down $5. I thought it was down more than that. But so I mean, we
It was
did
still
have
down 10.4% last week.
yeah, and we did have some movement last week. Um, and I think my read from last week was there was more sellers that came into the market last week than we've seen for a while. It was the first
Why
week
do you
we've
say that
seen,
though?
I think it was the first week we've seen some, under the kind of under the floorboard selling. And it was the first week I thought that they, like that, Nvidia turned south and stocks like, you know, um, uh, Coinbase back under 300, although, Bitcoin's not down that much. and Bitcoin's still 111, almost 112, and Coinbase back under 300. I think there's some interesting things going on, and some of these stocks that people think it's a stock picker's market, and I think there's a few cracks. That's all.
Tom, before we bring in Ellie in a few minutes, let's quickly go through some of the earnings this week. There are a few names. Oracle's going to be reporting. Chewy's reporting on Wednesday. Adobe. Do you have any strong premonitions on these upcoming earnings releases?
I mean, Oracle is probably the most tradable. I mean, Adobe is really hard to trade. It's expensive. Markets are wide. Oracle's at least liquid, but it's been pretty soft. Oracle has been. And then Chewy's, it kind of trades by appointment. If you're going to trade Chewy, you essentially, and don't forget that stock's up in the 40s. It's been kind of stuck in the 30s for all its last couple of earnings trades. But Chewy to me is the kind of stock where you just sell some puts and you hope you get lucky. Oracle, you can actually sell some premium. And last time it moved outside the expected move. So this time I think it's going to be inside. And Adobe is the tough one. Adobe is like, you flip a coin. And none of those, by the way, are great plays. They're all Broadcom-like plays. They're all Lulu-like plays. I mean, I wouldn't get too excited about those earnings plays. I think what's more interesting for me this week is that you're getting into, you're getting into mid-September. You got all the players back. If you looked at the volumes on Friday, I want to say we did on Friday, I think we traded 72 or 73 million options, which to me is a monster number. Like we've only had a couple of days in the 80s in history. So you had a lot of two-way trade on Friday. You went from up 35 to down 50 at one point. So you had almost a 90 handle range, which is more than the range for the entire week. That leads me to think that there is some play coming into this market. Maybe not next week, because next week's triple witching and all this other stuff. But this week, I think could be kind of interesting. You've got, you just have a lot of volume. You have a lot of players, as witnessed by Friday. Usually, we don't get that kind of option trade on a Friday. You had decent futures volume as well. You had a lot of players in the market.
You mentioned the volumes on Friday from SIBO. Friday's option volume of 76.2 million contracts was 31% above recent levels, with calls leading puts 13 to 9.
We don't get above 75 million contracts very often at all. It's funny, but when we first started building, software for option trading, it was like if you got 10 million contracts trading a day, it was a lot. We used to have a high frequency firm that used to route orders using our pipes, not the same as customer orders because those get marked differently, but we would build a set of pipes and they would route, probably about a million. I think 1 or 2 days they did 1 million contracts, and at the time it was like 10 or 12% of the volume, literally 10 or 12%. Now it's now it's like 1.5%, 2% max. So anyway, so it's it's a very different game nowadays.
It is. Let's talk about meme stocks real quick before we bring on our friend in San Francisco. I couldn't help but notice that Open Door Technology is hitting a new local high. There was some initial craze at the midpoint of July for some names like this, but the craze has kind of continued. Even something like rocket companies, which again fits the bill. We've covered this in Overtime, RKT in particular. It's one of those heavily shorted stocks, kind of like Open Door.
Yeah.
And it's here squeezing the past week. Are we seeing a subtle meme? Yeah, go ahead.
I think the Open Door is actually more interesting because that's a stock they couldn't give it away at $2.50, and at where's it up to now, like 11 or something?
665.
Oh, I'm sorry, 665. But
but it's still tripled over the past month.
Yeah. They couldn't give it away at like $2. So I think that's kind of interesting. But you know what? I mean, personally, I don't play these, so it's so I don't know. I mean, I have a lot of friends that do play this stuff, but mostly they trade the stock. I think they think there's too much edge they have to give up in the options, so they mostly just scalp the stock or speculate the stock. I don't trade Open Door or Rocket or any of those kind of things I'm not a meme stock, not a huge meme stock fan. Uh, I don't know.
Is it interesting to you that we're seeing meme stocks surge while things like Bitcoin and Ethereum struggle here? Ethereum's, almost 20% from the highs. Same thing for Bitcoin.
Well, Bitcoin is 111 change. I mean, it's 8 or 9% off its highs, and it hasn't a sell off in 10 years. I think there's way more risk in Bitcoin than there is in almost any other asset class. And I know I'm alone on an island like this because I'm still long Bitcoin and I'm long Ethereum, but I think that digital assets here have have political risk, and they have political risk because there are potentially so many conflicts out there, and it's going to come back to bite these crypto firms, and and a lot of these uh, crypto ETF like stocks. And I think that there's a ton of risk in the digital asset space right now, just because of where prices are. They're just outrageous. Um, I don't think they're going anywhere. Like, I don't think there's risk to the industry. I think there's just risk based on price. I think you could easily see 10, 20, or 30% lower in any one of these cryptocurrencies, any one of them. Like, it wouldn't even phase me for a second. Then I think they'd be interesting. If they get down 20%, then of course I think they're interesting. And there has been some decent move. Like, we don't want to forget there's been some decent move in commodities over the last week. You had a huge, massive move in bonds. You had a lot of movement in crude oil. You had some incredible gold moves in the last week. So there are a bunch of different things that are moving around. I mean, gold had a monster run. It's down $20 tonight, but it had a monster run. The silver hasn't even moved. So the gold silver ratio is just gold doing whatever gold wants to do.
Yeah, gold in here at 36.32, close Friday 36.53. Tom, I couldn't help but notice at the end of last week, you're getting into this territory for gold and silver where when you're like more than 5%, 7% above your average for the past month, historically over the past 2 years, it's been a local topping point. And concurrent with that, you're seeing volatility fall off for the metals. So I don't know, maybe this week things chill out a little bit. There's not many earnings. We have an inflation report. Yeah, go ahead.
On Friday when we did a live show, we scalped a little gold and silver. Because market opened up big, and it opened up big and then it sold off big. We were just looking for different trades, so we bought some gold, sold some silver, and we scalped out of it. By the end of the day, we also bought some bonds and sold some. I'm sorry, we bought some bonds and sold some notes, and that trade actually worked. So we did a bunch of pairs trades that we actually had a bunch of fun with on Friday. And I think if you don't fall in love with these positions, there's a lot of pretty interesting intraday moves, and that's kind of what we showed on Friday. Mm-hmm.
Well, why don't we bring in our next guest here, Ilya? He's been chasing gold to the upside, so this is a good point to bring him in. I wonder how it reconciles his long dollar view. Ilya, welcome.
Gentlemen, how goes it?
Hello, Ilya.
I don't think you really need to reconcile.
Made the live appearance Friday at the San Francisco event.
I did. It's a great event.
It was good to see everybody. Ilya showed up. Tim Knight showed up. There was a couple of guest appearances. It was very nice. Mm-hmm.
Did Tim Knight have shoes?
He had shoes, but he also had his dog. So we had shoes and a dog. Ilya comes Ilya is very normal compared to Tim. Ilya he wears shoes. He doesn't bring a dog or a kid. He's relatively normal.
Relatively.
Well, he's still doing the Richard. What was it? The Richard? I'm never just Theranos. Elizabeth Holmes. That's it. This is a terrible joke. Ilya, you had a good weekend, did you?
I did. I took my kids camping this weekend. They were running around in the woods all weekend, going crazy. It was excellent.
Ilya, gold prices, they surged on Friday. They came back in a little bit in this morning, or at least this evening, rather. They're a little touch softer. Non-farm payrolls, they were not good. Plus 22K.
They were not.
Fed funds are now pricing in the September cut, mostly in October, mostly a December cut here.
Yeah.
Tom said earlier that he thinks bonds up at 116, 117 are fairly priced for the cuts, and you have to start to entertain 50. Is that what gold's telling us too?
I think that's a part of it. Although I think gold started to make that run a little bit earlier and seems to be more like a creature of uncertainty. Seems more, and I don't want to say safe haven because there's nothing safe about gold per se. It's more like you got this thing where India made a big show of saying we're going to diversify away from holding sovereign debt, including US sovereign debt, and buy more gold. And I don't think that's necessarily a thing that moves the market, but it's a vibe. And as you get more liquidity, it seems like people are starting to look, okay, well, also the president's got this bunch of cases, one on the tariffs that might get overruled, and everything that the markets have been basically baselining around since April goes out the window. They've spent all this time from Liberation Day to basically now back to record highs going, okay, let's digest what the order of things is going to be and rebase, and this can toss it out the window. So I think there's more uncertainty. There's more term premium coming back into the bond market. And you get this sense that, like, okay, let's hold some non-fiat, non-US based value as a hedge. And certainly, it doesn't hurt that yields are down a lot. But notably,
So are you still leaning?
The dollar is up relative to what everything is going on. You'd think it would be getting crushed. It obviously had a bad day on Friday. But rate cut expectations this year and next now exceed April's lows. This is the most dovish outlook on Fed policy that we've had all year long, this year and next year, and yet the dollar made its low in July and has not retested.
I would argue the dollar's not very strong here, dude. I would argue that I'm not sure what movie you're looking at, but
I think it would be getting killed under similar circumstances. I mean, with bonds doing what they're doing, the yield advantage to holding dollars is fading fast. You'd think it would be cratering, and it hasn't made a low since July.
Okay, so we have both of you guys on opposite sides here. Tom, how are you looking at the dollar going into this week?
I'm staying long the yen, and I am right now. I'm a little bit short the euro tonight, but it's not my play. I mean, it's just where I ended up on Friday. So I'm my only real dollar play this right now is long yen. I've been long yen all year. I haven't changed my position once. I think it's the right play, just selling puts in the yen, doing nothing else all year long. It's worked so far. I'm not changing. It's my 2025.
Not broken,
play.
don't fix it.
Yeah, it's not broke. I'm not fixing it.
Yes.
It's to me, it's you had to be long bonds and long yen all year long, and we'll see how it plays out. And then next year we'll make a decision on kind of like, which direction. I don't think either of those two. I think the correlation between bonds and dollar and gold, I don't know if it's trade. I don't know if that correlation is tradable. I think if you want to trade like pairs, you can do gold, silver, you can do bonds, notes, you can do ES, NASDAQ, and Russell all against each other. I don't think you can trade intermarket spreads right now and think that you can gain anything from it. I just don't.
I mean, Elliot,
bonds and yens are close, but it definitely waxes and wanes a lot.
Oh yeah, big picture here though, right?
This year, last year, than it did, let's say, the previous 10.
Okay, so that's the point I'm getting at. Like big picture, people like us, I think this is a really difficult. I find it easy, but also difficult as a macro trader because all of the relationships, the long-standing correlations, Tom, as you mentioned, they break down.
Yeah,
you're not getting what you should be seeing in the textbook, so to speak, in some of these currency markets when you see the way the bonds are trading, the way gold's trading. So I'm with you, Tom. You can't go across products right now in some of these cases. You got to stay in the same market.
Yeah, no, you have to be really careful.
The term you're a macro trader because I don't think that person exists anymore.
No, this year's changed everything.
No, you have to be very careful.
Long gone.
I mean, these relationships, if you are a trader that cares about macro variables, you need to remember that those macro variables are not locked into forever regimes, that relationships change, that this is the first meaningful period of inflation we've seen in 40 years. It's the first rate hike cycle of its kind that we saw in 2022 that we've seen since the 80s. This is macro regime change. And we don't know what the next macro regime is going to be because the relationships are in flux. But everything that you've known since basically the Volcker disinflation through COVID is in the process of reorienting. So you can't bet on any of the old stuff holding.
So, Tom, could I sell you on a Canadian dollar short call spread here going into next week? It's a 57 IVR. Okay, I know you're not liking the dollar long right now, but going out to 26 or even 61 days, there's a decent enough premium in here for folks who are just dipping their toes, and the liquidity is not great right now. So I'm not going to pay attention to the max profit, max loss. But something in this 55 to 60%, you could get a 3-to-1 risk to reward in something like short 60, even if it's not great liquidity. You may have to sit on it for a bit.
Canadian dollar got shellacked last week.
I mean, my issue with Canadian dollars, I have trouble getting fills in there. I have a lot of trouble getting fills in the Canadian dollar, and I have a lot of trouble with I have trouble trading it. That's all it is. I mean, I just have trouble. I guess you on a call spread you can get filled, but it's just it's fairly liquid, and that's all. That's my only issue. Like if you're bearish on the Canadian dollar, if you're really bearish on the Canadian dollar, I would either sell the future or do this or trade the spot market.
I've been trading the micro futures outright, and that's been a kind of good mix of liquidity.
Do they have a
size.
Micro future for the Canadian dollar?
Yeah, MCD, /MCD.
Okay.
And I've just been doing that because it's a good mix of it's not that big and you can get fills.
But they don't have options. That's the problem.
Not on that one, no.
Right.
Yeah. Yep.
Okay, so let's change our attention, Tom. You talked about gold before, but you also touched on oil, which gold and oil moving in opposite directions last week, fairly meaningfully. But it's only a 22 IVR down here. I'm questioning whether or not my directionally neutral trades are still worthwhile.
Yeah.
How would you be approaching this market right now?
In oil?
Yeah.
I'm not. I have no oil position on. I think it's kind of like it's been stuck in kind of no man's land. I mean, you would have been okay with the short, condor strangle, but I don't have anything on. I have been trading natural gas. So that's the only thing that in any one of those, in any correlated category, I am trading natural gas, and we are short a bunch of puts in there. It got down to like 280-ish. Now it's 307, 306. But we have been short puts in there and leaning long natural gas. That's the only, to me, that's a more interesting trade.
At what point do you turn off that switch, though? Because it's a 28.7 IVR in natural gas and 22 in crude. Is there a point where the IVR compression becomes so indifferent?
It has nothing to do with, that's a directional play. It has nothing to do with IVR. So if the IVR was 2, I would still be short puts in there because I'm just playing it directionally. See, there's a difference. If you're short premium, you need volatility. But if you're just playing something directional, it is what it is. There's nothing you can do.
Is what perfect. It is. Ilya, what's the top story for us to worry about this? No, that is trading, right? Ilya, we talked about the earnings calendar earlier, Oracle, Chewy being the two big ones, I suppose. The Fed's on their communications blackout window this week.
Yep.
Inflation's due out, though, on Thursday.
Yes.
That seems like it might be important, given everything.
Absolutely.
Does the market care, though? The market, I just want to bring up the point, though, that the market didn't care about non-farm payrolls, right?
I think it definitely cared. You can see that it cared. You can very plainly look at what the bonds did and see that it cared. The situation with stocks is stocks are more of a sentiment kind of indicator here. In fact, if S&P is basically back to being the market weather vane, it's risk on, it's risk off. But you can very cleanly look at the bonds and see that the markets cared. You can very cleanly look at the dollar, which got waxed on Friday, and see that the markets cared. I think the question more so is, what did they care about? Because to Tom's point and yours, I don't think that there is any controversy whatsoever about this rate cut that's coming next week. I don't think there's been any controversy about it since probably May. Like, the markets have known this thing is going to happen, and they've been centered around 50 basis points since basically then, give or take 10, 15 basis points of a swing in either direction sometimes. But mostly, since May, they've been pinned around 50 basis points in cuts for this year. And that matches what the Fed said back in December, before the tariffs, before any of this. So, and has been continuing to say. So, I don't think there's really any speculative juice there. I think the conversation is elsewhere. The Fed is saying they're only going to do 25 basis points next year, and the markets think they're going to do 80. And that's a huge difference. And so, really, next week is about the summary of economic projections and whether the Fed says we're going to pay attention to all these signs that the economy is reheating, like the ISMs, the other PMIs, a bunch of other data, or we're going to look at this jobs report and say this is the only thing. And so, in that sense, these inflation numbers are going to matter, because if they're hot, Fed's probably not going the market's way on next year's outlook, and the rug pull is going to be significant. And I don't think that bothers the long end of the curve. I think that keeps going higher because those rate cuts are just going to get pushed further downwind. But I think stocks are going to get uncomfortable because they've been doing all of this since maybe June on the strength that there is a huge easing cycle coming next year. And if the Fed says, no, there's not, they're not going to like it.
Thomas, the end of last call here, so let's do a little round of Saz Says. What do you say are the most important things for traders to keep an eye on next week? What's your top trading idea, perhaps?
I think that the top we made on the intraday or the early morning top that we made on Friday after the after the bonds popped up and stocks popped up and the futures got to. I'm not sure exactly what the high was, but I think, let's say it was about 50 points higher than where we are right now. So maybe 64.30 to 60. I'm sorry, 65.30 to 65.40 in that range. I think that is a really good spot if they get back up there for a place to get a little short. I think that given the size of that sell-off from that reversal intraday on Friday, that's going to be a spot where a lot of people ended up trying to catch the wave to the upside and they got caught. And there was no really way out. So I think that any kind of move back up to 65.30 to 65.50, let's call it that range, that 20 handle range, I think that's going to be a really good entry point to the downside. I also like the velocity at which they dropped on Friday, meaning that there was some sellers underneath the surface. So, and again, we were doing a live show, so it's a little bit hard. I was kind of not facing the screen the whole time. But I felt like that was a significant enough move early on Friday morning that that I don't think you can just completely discount it. I think it's actually pretty interesting. And so I don't think you want to sell them in the hole here, but I think if you get a nice little rally Monday or Tuesday, even anywhere up, anywhere in that range, 65.20, 10, 30, whatever it gets to, I think it's a good spot to take a shot to the downside. And as far as like any other market, I think it's too late to buy bonds here. I think maybe they have another half a point to the upside or maybe a point to the upside, but I don't like them anymore. And so we covered we got out of our long bonds on Friday. With respect to the rest of the market, it is just like you guys said earlier, it's going to be stock pickers. I think there's certain stocks, and maybe Apple's one of them. Buy the rumor, sell the news. Maybe Reddit's another one, I think, up here, that I think there's a lot of stocks that are super rich, and I think there's a lot more risk, to potentially pulling the plug on some of these than there is to the upside. You need a little rally here. You need to goose them up a little bit, maybe tonight, tomorrow morning, and then I think there's going to be some good opportunity.
Well, you know what? Tasty Live programming continues in a few hours' time. Actually, 6 hours from now. No, we're going to go more than that. 7. Yeah, we'll go 7 hours from now. I don't know. 2:30 Eastern, 2:30 Eastern, 1:30 Central. Is my math terrible?
Yeah.
It's 8 hours.
It's 8 hours. It's 8 hours.
Take a break. It's a good time to sleep. You need 7 to 8 hours of sleep at night, folks, right? So go get 7 to 8 hours. Go get 7-8 hours of sleep and come back at 2:30 Eastern, 1:30 Central to watch Tasty in London, of course, Trade with IG. And then Tom and Tony are back tomorrow morning, 8 a.m. Eastern, 7 Central time.
Yeah, with bells on tomorrow morning. We're going to have a good time
Tom,
tomorrow.
I'm going to see you tomorrow morning. Ooh, it's going to be fun. Ilya, I'll see you tomorrow for Futures Power Hour. Everyone,
Yes, sir.
Good luck trading. Good night. Cut down your trees.
Cut down your dead trees.
A very good morning to you all. And Angeline, happy anniversary.
I'm so excited. Can you see? It's real, everyone. It's real. And, we had Terrence in here lighting it. Does it feel like a year? It feels like it's been more than a year.
So take us through what happened in those first few days, because I wasn't there. I was watching at home.
You were
but I don't know the behind the scenes story.
Well, Frank Caberna was flying in. We were making sure that comms, everything was working. And then we had this inkling that we might get to meet the rich soon. But I was kind of like, when, guys? When?
I sent you your first question.
Yeah, you did. Yeah.
What was the question section called?
Confirm and send.
Confirm and send. Yeah.
And the thing is, like in normal,